Hey everybody, Matt Faircloth here. Welcome to the DeRosa Insiders live show. If you want to learn more about DeRosa Group, go to derosagroup.com, and please enjoy this program that is dedicated to help you learn all about the real estate investing business so that you can take your real estate investing activities to the next level. Let's get into the show. What's going on, everybody? It's Matt Faircloth. Welcome to the DeRosa Insiders live stream program. Thank you if you guys are watching this on any of our live channels such as YouTube, Facebook, LinkedIn, wherever it is you're watching. Thank you. And this may go out on Spotify. So if you're watching on Spotify, thank you also. We had a good program today, guys. It's important to look back so that you can look forward. There's no way you can plan forward in your business or in your life if you don't look backwards at the successes and losses. So we're going to be talking today about successes and losses that we've had here at the DeRosa Group. Challenges and successes, maybe even some big, hairy, wild predictions for 2025 on today's program. Really exciting show for you guys. I hope you guys can stick around. If you guys are watching live, please comment. Give me a few shout outs here in the comment bar on whatever medium you're watching. Let me know that you're out there. I'd love to hear from you. Let me bring in my co-host for today, my partners in crime, my brothers from other mothers, starting out with my man, Hervé Francois. Let's bring him on to the live stream. How are you today, brother?
Matt, it's always a pleasure to be here. What is going on, man?
It's
End of the year.
It's been a minute since you've been on the DeRosa Insiders live stream. It's been
a minute.
Thank you for taking your time out of looking at deals, making it rain, acquiring things here on the DeRosa side. I'm my business partner, sometimes running around looking at new opportunities. We're going to bring in our other guy, who's our DeRosa firefighter, the guy with the fire extinguisher, keeping the trains running on time, operations manager, always sometimes putting you and me in a headlock as well. The adult in the room, Justin Fraser. Let's bring him in.
Firefighter, adult in the room.
The youngest of the three of us, but also probably the most mature.
It's probably very true. He wears that label very well.
Oh, man. How's it going today, guys? What's happening?
We're great. I'm great. Hope you guys are great too. Yeah, there's exciting conversations we want to have today because I don't know why it is. I guess it's just because it's the end of the year, but New Year's and end of the year tends to cause you to get a little bit more reflective. I find that I get reflective on my birthday and reflective on New Year's, looking back, looking forward. And so I wanted to sit down with you guys and look back over 2024 and talk about, obviously, it ain't all sunshines and roses. It's not all perfect, but we certainly had some sunshine and had plenty of roses. We also learned a few things too. So I wanted to go through with you guys just what happened looking back through the year, ways that we could celebrate and things that, like, man, we'll do that again. So let's get into today's show with you guys. Which one of y'all want to go first? What jumps out at you as a look back from 2024? Positive or negative, thorns and roses, whatever you got on the look back from the year.
Justin, I'll let you start, man, because there's been some real big metamorphosis events that have taken place.
You mean the entire company we launched and operated since January 1st of this year? That's keeping me a little bit busy.
Exactly.
That little venture keeping us a little busy.
Man, it's only almost been a year.
Can you believe it? A year and a half ago, we said, let's go build our own management company. And it was around about a year ago, we pulled the trigger and took over our Kentucky portfolio January 1st of this year, and the rest of our portfolio February 1st. And we've been in operation now just about a year. We've had our lessons learned, that's for sure. But you know what? We're figuring it all out, figuring out how everything from payroll systems to people to management and technology works. We at DeRosa, our investment company, we've got a small little company here, right? We've got a couple folks spread around the country, which is great, right? We've got a nice management company, but then you add in the management company with 40 to 50 people across every office we have. Now you're dealing with a lot of personalities and a lot of HR and a lot of staff management, and it just makes everything exponential in terms of management. And so there's been a lot of lessons learned there. But yeah, it's been a wild ride, but it's been great.
Let's lean in here for a second. Like, why would an owner of real estate do something so crazy as to go and start their own management company? You probably ask yourself, questions some days too. Like, what?
They have two business partners who twist their arm until they do it.
Yeah, I know. I think I brought it up 7 or 8 dozen times before we actually did it. Like, hey, you know what the cool kids are doing? The cool kids that I look up to are out there and they manage their own stuff. And it's a great idea, Justin. You know why? Because I don't have to do it. I can just give the idea and you do it. And you did. But like, for those watching, why would somebody be so crazy as to start their own management company to run their own assets? Why should somebody watching think about doing that themselves?
Look, what we were experiencing, what I still see talked about online every day, if you're talking and looking on any kind of online forums, people's challenges in multifamily, the attention being paid by third-party multifamily property management companies. The fact is, you're just not going to get the level of service from a third-party company as if you're taking care of your own asset. There's just a pure disconnect. If you built the company and it's your asset that your company is taking care of and managing, then you know that every decision being made for that asset is in the best interest of the asset, the people that work there, the investors, all the way up and down the line. If you have a third party that gets paid on fees or based on how much spending is happening at that property, then maybe they're incentivized to spend more so that more fees are generated, right? And so there's all different ways that third-party company can be incentivized. That may not be in alignment with the best interest of the property. You start to see misalignment between the management company and the property itself and the ownership group. And alignment, control, all great reasons to have and build your own management company. Now, it's not an easy thing to do. There's a lot of moving pieces. It's a very heavy challenge. But at the end of the day, if you find yourself needing that control, as many people in this industry are moving towards a vertically integrated model, I think that's the way most companies are going to go, because no one's going to take care of your property like you will.
Somebody's watching this right now. They got 2 units. They got a duplex, something like that, and they don't live in it. Should they manage that themselves?
A duplex, for sure. Yeah.
If that's the only asset they got.
I mean, it's going to depend on your goals, right? If you are a dentist and you love being a dentist and you've only got time to do dentist things in your life and you have a duplex and you don't ever care and the management fee is not going to make a difference in your life and you don't ever want to think about that property, then sure, hire a property manager and never think about managing that property ever. But if you are someone who wants to manage that property and learn the business of property management because you might buy more and start to scale a portfolio, then sure, self-manage, learn the business of management. There's nothing wrong with learning that in that space of 2 units, 3 units, 4, 5, 10 units even. Definitely. I manage all my smaller properties. Then I hired a third party when I brought on a 40 unit. But because I had self-managed, I knew what to look for and how to lease a unit. I think that helped me ask better questions when I went to vet different companies.
Yeah.
And now here we are back in the self-management game at a much larger scale.
Managing yourself is one of the best ways to learn this business. You're not going to learn as much if you don't put some time in. Yes, it's not the most efficient. Yes, you're probably better off being the dentist or your usual trade versus real estate. But if you want to make a run at real estate full-time, being as immersed in it as possible is the way you're going to learn. And that's where I learned a lot of the lessons that I talk about on my YouTube channel about this business from managing myself and like crazy stories.
That's how you learn.
Crazy stories that you can stop a cocktail hour telling your landlord stories from self-management, but also the lessons that you're able to apply over and over again. So we self-managed here at DeRosa. Went from 8, 9 employees to I think north of 50 now overnight with bringing management in-house, correct?
Which came with a amazing benefit for us, which meant that we could get healthcare all of a sudden. We had enough buying power with the management company that we actually could provide healthcare options even for us. So that was a nice unexpected benefit. Have you heard that as a benefit when people talk about going vertically integrated? I have not, but that is legitimate that most people don't really talk about. And so for my family, at least, that's very important to have healthcare coverage. And so it's amazing for us. And I know for your families and for all of our employees as well. That makes our company more attractive because we can now offer benefits of a company that has way more people than just our little investment company. We have a much more powerful company behind us. Behind the scenes, we're all one large company.
I think that it gives you that much leverage overnight that you are now a mid-sized company that's bringing in a significant amount of revenue. Yes, you're paying a lot of dollars out the door too, but you're bringing in a lot of dollars coming in. You're paying out a lot of payroll. And I'm not saying it's guaranteed, but if you look back at your portfolio, if you've got a reasonable sized portfolio of real estate that someone else is managing for you, just look at the amount of staff they're using to run the assets that you own and realize, wait a minute, those could be my people too. We just had an incident the other day of misalignment with the company culture we're trying to build. In hiring a third-party management company, you got to deal with it because your culture is filtered through the culture that PM company is conveying, right? They've got their own culture, their own employee standards. If a resident responds a certain way, the employee is supposed to respond a certain way back. If they're our people, we can train that from the bottom up. And that, to me, that's been the benefits of being a mid-sized company, just being able to control the way that the team members respond to the residents and the way that the business gets handled, I think has been astronomical. And we've only seen the beginning of the benefits of that in just a year.
Yeah, and I get a glimpse of that every time I visit a property and someone walks in, and I get to see an interaction with a prospect or a resident and how a maintenance person is interacting with someone who walks in with a question, or just if we're walking a property with a maintenance tech and they get pulled aside by somebody that has a question, and just how that interaction goes. Like, they're representing us as owners because we're not on property all the time. The team is, we're not going into those units. The maintenance team is. We're not there asking for rent to be collected. The leasing staff and office staff is. And so how they represent us, how they are interacting, how they present themselves is all a reflection of us as a company. That culture, the standard it's got to be a great fit. And they have to make sure that they represent the DeRosa core values and that we're all in alignment with how we want to be represented and that they are a good fit for us.
So it's a DeRosa Living big win for the year overall. Any challenges you got? Well, the challenging is all easy. This whole thing, Justin, you just waltz through the year. Just tap dance through 2024. Justin?
Yes, plenty. Many challenges, but I've got good people on my team to handle all the challenges that come up, and we just work through it every day. There's
always challenges. Every time I talk to you, it's, oh man, we had a fire at this property, or we just had our key employee quit at this property.
Every day, there's no calm weeks. There's no calm months. There's always an inspection, a refinance coming, a sale coming, an acquisition coming, a staff member quit, a new hire coming. There's always something. And if not, there's a hurricane. Like, literally, all else is quiet.
We're the worst thing ever. You got to go and fly out there and meet with the town inspector and say, hey, we're actually not that bad. Convince those town inspectors that we're actually one of the same things they do, which is a quality, safe place for people to live.
I will tell that as a win. That was, I think, a great lesson for this year for me, sitting down with city code officials in a town we have operated in for years, but never taken the time to sit down with not only code officers, but the supervisor to say, hey, let's level set here. You're writing this up left and right. You come in to close 2, you're writing 3 new tickets on the way out the door. What's going on here? Let's sit down and level set on expectations and make sure we understand where we're coming from. And let me explain how we operate, what we're looking for, what our goals are. Let me hear from you what your goals are. Really understand each other. Let's understand the process of how you do what you do. My team had a great meeting, which ended up being 2.5 hours, where we came to a solid understanding of how the process works, which is not documented anywhere. It's not on the website or anything else. Information about how to work through compliance schedules is told in like side conversations, but never properly communicated. Whole appeal process things that have never been properly communicated. Also questions that came up that basically great productive conversation that led to really solid mutual understanding, great follow-up since then through email. And so really just shined a light on the fact that, hey, we're a stakeholder in this town. We probably should have sat down with this department a long time ago, and now getting it on the schedule in Q1 to do with the other towns that we're heavily invested in as well, because it's absolutely critical that we do that. And so that's going to become part of our process moving forward. We're going to go buy in a new town. We're going to sit down with that code office.
Meet with the government.
Absolutely.
Yeah. That's what we need to do. Come into town. We want to sit down with the code office. We want to understand how you guys operate, what you're looking for, what your goals are, because we want to be stakeholders with you. We want to make sure we're working towards the same goals.
Yeah. When I was a rent landlord, there was a mantra, a way of being around a lot of other landlord buddies that I had. And I went by this rule too sometimes, is like stay below the radar with regards to the local town. But there's only so far you can get in doing that and in keeping things away from the local town. Don't talk to them. Don't communicate. If they come out to inspect you, then just do what they tell you to do. Don't try and make friends or put yourself under their targets any more than you need to. Because when they do come out for inspections, when they see what you're doing, they're going to assume that you're cutting corners and doing things the wrong way, whether you are or not. It is much more forthright to put yourself into hey, this is what I'm doing, town. Help me do this, because they really want the same things that you do. DeRosa Insiders listeners, everybody watching here, it is the long game to communicate directly with public officials, inspectors, all the zoning officers, and just do it the right way. It might be a little more difficult, but they're going to help you. The reason they bust balls is because there are a lot of people out there that are bending the rules and being slumlords. And if you're not a slumlord, you make sure they know that. They will try and help you. So
somebody had given them an impression about us, and I think it was a false one. That's why I wanted to go face to face and let them meet me, one of the 3 owners of the company. They said, "Oh, there's only 3 of you." And I said, "Yeah, I'm one of the 3." And talked about what we do and who we are. Just put a face to the company. Not a billionaire, not a huge hedge fund. Like, it's me.
I'm going to, my man, Rashid had a question here, Hervé, and I'm going to throw this one over to you. What are our stretch goals? And then we're going to talk about acquisitions and your challenges and successes, but I want to acknowledge our audience here. Sure. What is a stretch goal that you see, whether it's in the company in general, acquisitions, anything you want to toss out there that is a bit of a reach, but attainable?
We have different aspects of our business, right? Justin just finished talking about DeRosa Living. We still have our acquisitions team and the DeRosa Income Fund. I would say all 3 divisions have their stretch goals for 2025, as well as things we do internally for the company that supports DeRosa Living, as well as the acquisitions, as well as the DeRosa Income Fund. I'll let Justin pontificate a little more on stretch goals for DeRosa Living going into 2025. I would say, and we've spoken about this before, not all the pieces put in place yet, but at some point to go ahead and provide consulting services to real estate owners that would like to go ahead and think about launching their own property management company for their real estate portfolio with all the knowledge that Justin has, along with our other asset manager, Tara Smiley. There's a wealth of information that DeRosa Living can provide to owners, as well as maybe being opportunistic about third-party property management. So I would say those are some of the stretch goals for DeRosa Living. Nothing necessarily quantifiable, unless Justin and Tara have been putting some numbers behind some of those possibilities. I would say on the acquisition side, we have been really blessed going into these other asset types besides just multifamily this year. As Justin was talking about DeRosa Living, I could tell you what's been happening on the acquisition side as one door. I'm not going to say the acquisition door closed this year. Let's say it was perhaps changed and it took on a few different colors and so on and so forth. So the acquisition store is still very much open, but it took on a different skin this year where we got into some really nice development opportunities in a brand new city where we had not been acquiring assets before. And then we're continuing to look at hotel deals. Stretch goal for 2025, I would say even more development deals for DeRosa Group next year, as well as expanding our hotel portfolio. And then we're going to continue to look at deals in our targeted markets for secondary manufacturing acquisitions. DeRosa Income Fund, sky is the limit on that. I think we're targeting to go from about 8 million in assets under management today to 20 million by this time next year. So that's a stretch goal for DeRosa Income Fund.
Huge stretch goal. Yeah.
And then I would just say, lastly, a lot of the discussions that Matt, Justin, myself have in regards to DeRosa Group management, corporate, some of the things, right? We're always focusing on our people. We're focusing on, do we have the right people in the right seats? Do we need to bring on more? Do we need to put on some additional responsibilities to some of the teammates that we do have? So that is a constant discussion that we have, because we are truly as good as our team members, and they've been absolutely outstanding for us. We have some fits and starts throughout the year, as any small company would, but we're certainly on the trajectory that we want to be. We're really excited about it. I don't think it's a race to hire a bunch of people, but making sure that the folks in the seats are really in the optimal seat.
Justin, any other stretch goals you want to throw out there for where you want to see 2025 go for the company?
We got new asset classes we want to get into, as Hervé said. But no, I think, Hervé, you nailed it. You covered every for the company there. So I think you got it.
All right. Let's look back. 2024, tough year on acquisitions, man. It's like every seller got frozen in 2022. And nobody gave them the memo that interest rates and cost of capital had gone way up, which is going to drive up cap rates on deals. The sellers and brokers seem to be the only ones that didn't get the memo on changing. So what was the challenges and successes that you saw on our side in buying new properties and finding opportunities for the company?
Listen, man, that's a great question. Challenges is amazing, right? Each of these real estate groups, us included, we go into a year with our plans, with our goals, and they're really attainable. Then along the way, something happened, typically externally. A couple of years ago, there was a pandemic. This year, it was higher rates and the impact on your portfolio. Some of the challenges this year, even though we underwrote 51 deals, that's down from underwriting about 175 deals last year. So even though we underwrote about 51 multifamily deals this year, and we submitted a whole bunch of LOIs, probably close to 20 to 30 LOIs. It was disappointing that we didn't nail any of those. That being said, although it's disappointing because you like to view making an acquisition as a win, at the same time, we were very disciplined. And I'm glad that we remained very disciplined, because even some of those deals that we were looking at earlier this year, they are already hurting right now because that buyer perhaps went ahead and spent too much on it. They put the wrong kind of debt on that deal. Just cost of renovation started going up. All of a sudden, they had to temporarily hold off on paying distributions to their investors. Underwriting deals in a rising rate environment and believing that you're going to have a big number in acquisitions this year was truly the biggest challenge. And again, it's an external factor, truly out of everyone's control. I equate that to, we couldn't have launched DeRosa Living in a better year. We could have launched when multifamily deals and acquisitions were going through the roof. We could have done it then. But when you are basking in the light of successes, you don't see a lot of errors. You don't see a lot of mistakes. You don't see a lot of trips and falls. It's not until business starts to slow down, rates go up, you can't add new projects into your portfolio, then you start taking a look at your own portfolio and you're like, oh, we need to pay better attention to this. What can we do ourselves to maximize NOI? We know we got these third-party property managers and they keep on telling us a lot of good things, but can we be doing something even better than they're doing? And I think that one of the impetus in us going ahead and launching DeRosa Living earlier this year. It was a great thing because we were able to focus on improving the performance of the portfolio. Fast forward 11 months since we started DeRosa Living, I don't think our portfolio would be operating in the manner it is today if we had not launched DeRosa Living and it was still those third-party property managers in Kentucky and North Carolina that was managing our properties. So that we had launched Living when we did. Huge success story. Living, sky's the limit for them too.
It was a good foundational piece for the company. It was a foundation that we can build on top of now. So looking forward, we got that foundation built. We've proven that we can raise the second half of 2024, raised a good amount of equity for new deals, more development deals, traditional multifamily. So we pivoted on the deals we got ourselves into. We got the foundation of DeRosa Living so we can run what we buy the DeRosa way. What's next? What do you see for 2025 coming down the pipe for DeRosa?
Going in 2025, Big Hairy Audacious Goals, I certainly would like to see us expand our portfolio on the development side. We could talk about where rents are going to be next year, depending on what part of the geographic market you're in. And still bullish on the Midwest. I think things are going to start improving in the Sun Belt markets, but not until the second half of next year. But specifically for us, I'd like to certainly see our portfolio on new development side. As we all know, we've got some things in backlog right now that we're currently working on that I'm excited to put out to our investors, perhaps in the first quarter of next year. On the acquisition side, I'm looking forward to attending NMHC in late January and circling up with a lot of the brokers and telling them about what some of our acquisition goals are for 2025. That's probably going to be expanding our portfolios in the Carolinas, changing our buy box a little bit, which, as you guys know, we did several months ago, not going to the oldest vintage properties in those areas, more so looking at properties built in the 80s, early 90s and newer, still with that value add component. And then also the third leg is on the hotel assets. We're really fortunate to have our underwriter, Heath Patel, that comes from that world, that comes from that tutelage of underwriting and managing hotel deals. Underwrote 50 hotel deals this year, up from about 18 to 20 hotel deals last year. So I'm expecting we're going to have some nice announcements in the first quarter of next year about some hotel deals that we're working on. We're excited. We're going to look closely at what's going on with interest rates and the overall impact they may have on development deals, acquisition deals, even hotel deals, because it impacts CMBS rates as well. If there's one thing I can share, don't try to time the market. If you find a good deal, purchase that good deal today. We're not in control of the rates.
Yeah.
There are other line items that you can go ahead and manage that can go ahead and offset any kind of impact that rates have on those deals.
If you get a good deal, the cash flows day one, cash flows now, it doesn't matter what rates are, does it? And if it cash flows under today's interest rates, if rates go down, you're cash flowing. If rates go up, don't refinance. Keep the rate that you got, and you've locked deals up under semi-long-term debt, like 3 to 5 years kind of thing. And if they cash flow now, that's great. They're going to keep cash flowing into the future. That's what I saw in 2008 when things got real squirrely. The stuff that I had with cash flowing kept cash flowing through all that mayhem. Thank you. My quick notes here, guys, on moving forward. She wanted to know how are we going to attract investors? Your timing is perfect. Let's touch on that. I think that looking back as a company, what I saw that we did well in regards to raising investors was continuous engagement. And that's what we're going to continue to do. We're going to be doing more educational webinars, teaching investors about all the things that a passive investor cares about, everything from how to quit your day job through passive investing. A lot of us want to know that. Maybe they want to find a way to exit from their day job earlier, but not start a new company to do that. Maybe they want to achieve the FIRE movement initiatives. We've created webinars on how to do that and how to leverage the DeRosa investment products. There's a lot more education coming to help a passive investor be stronger. So we're really leaning in to what's worked through last year, through 2024. And another thing is DeRosa Income Fund. DeRosa Income Fund is really leveraged towards short-term bridge debt and creating jobs in housing. So it's a mission-based cash flow investment. We're about to cross over 8 million. Our goal is to bring that over 20 million and maybe even leveraging in some bank partnerships to take it beyond there. So that's exciting for the income fund. I think that has learned how to manage and set up a fund. There will likely be one, maybe even 2 funds launched at DeRosa in 2025 aimed towards long-term family holds. That's how I got started. When I wrote Raising Private Capital, most of the money I raised was in short-term bridge deals for fix and flips and BRRRR project. I grew into taking that equity and doing long-term holds. We're now going to graduate as a fund company and take those dollars and put them into multifamily acquisitions and maybe into hotels. I really love the hotel model. It's a great way to serve people. It employs a lot of team members, so a great way to create a lot of great jobs for people and give people above standard hospitality experiences when they're on the road. So I see DeRosa achieving 20 million or more in total equity. To Rashid's question earlier, we are not going to be looking for family. If a family office comes in, kicks our door in and wants to give us money that works for us, great. But we are not, nor we've raised, I think we're over 70 million now in equity the company's raised. Not once have we taken a check from private equity, from family offices, from Wall Street Capital. There's nothing wrong with that, but we'd rather work with the individual one-off investor that's not going to put 50 million into our deals, but that's going to put 50K into our deals. And that's okay, because we are structured and we want to serve the masses. And it's not that you don't serve the masses when you work with large institutional capital like that. It's just that we'd rather do it differently. And we'd rather, from a company standpoint, be the director on how the dollars get put to work. Institutional capital guys, just Rashid specifically talking to you, I can tell by your question that you're maybe thinking of going to family offices. Unless you have multiples more under management, that family office is going to be giving you, so they're going to give you like 5 million. You better have 20, 30 million at work already, or they will own you. They'll tell you exactly where the money can go, where it can't. They will put you on a very tight leash and be able to take the asset back from you if it doesn't go exactly the way they expect it to. So, Hervé, any thoughts on raising money from onesie twosie investors and just individuals and going more boots on the ground with investors versus going institutional? And I know you did institutional for 23 years on Wall Street.
Yeah.
So, and then now you're dealing with mom and pop investor here at DeRosa. So any differences in the two on why DeRosa would want to stay with mom and pop investor versus going institutional next year?
I think for several reasons that you want to stay with DeRosa Group versus going on the institutional side. And I think some of those is the communication, the transparency that we provide to our investors, particularly when you think about the syndication deals that we do. I think a focus that we need to establish, and we've already started to establish, is the deals that we get into on the acquisition side, multifamily. They're not going to have the big undertakings, the biggest renovations that we have done in the past. We're going to probably pump the brakes a little bit. There's still going to be value add, but it's not going to be value add that we have to replace every single roof and every single pipe. There's probably going to be light to medium type renovations. And again, just to give our investors a little more clarity and transparency as to when they should expect their distributions and refinances. So not to put ourselves in the bind that the only way that we have a really attractive internal rate of return or cash on cash is if, we wind up executing on every single one of these. That 85-point checklist on renovation is going to get cut back to perhaps 20 to 25, if you will, and allow Justin and Tara to sleep a little easier. I think, it's communication, transparency, and it has to be a consistency, right? We had a very large investor come into our DeRosa Income Fund a few weeks ago, pretty much gave us half of their retirement fund. I think it's because of the consistency that they saw in our returns that we've been having DeRosa Income Fund up and running since August of last year. In print, that it pays out 8% annualized return to our investors. We've actually been hitting closer to 9.5% over the past several months, again, on an annualized basis. The quick phone call to our investor relations head, Jacob Sandoval, if they have any questions on their distributions, they have any questions on the performance of the deals, which you're not going to be able to get from a traditional portfolio manager managing a fund on Wall Street. We just have to continue to be great stewards of capital of our investors. We have to be very disciplined on the deals we go ahead and approach, how we go about by raising the capital, the type of debt that we put on that deal, and then, of course, the management of that deal with DeRosa Living, right? And just not staying out of skis, staying within our expertise, staying within our lane of what we do well collectively, so we can provide nice returns to the investors.
And I think that institutional capital is not going to let you pivot. And one of the successes we've had is being able to pivot into development deals. You can't go to institutional capital and say, I want to go build this 36-unit apartment building out in Minnesota. Whereas with smaller investors, you can create enrollment around the vision, and investors say, okay, I get it. I see what you're doing. I'm in. Whereas with institutional, we wouldn't be able to move as quickly as well. So for all the reasons, I think that just work better for us. Aisha, I would just say quick, you had asked about AI. And certainly we are using AI now already, mostly on the marketing and sales side. We use AI to make written content sound better. So we might have AI edit a few of our emails that we send out to make them more appealing. We are also using AI for things like video descriptions and SEO, for anything we put online, to make sure that we are putting things out in the best way for things to get noticed online. Right? AI is great at that. We are talking about AI on other sides of the business. There are products coming out on the AI side that will be more prevalent. Justin, for example, we were in a contract with a vendor and you weren't sure if the vendor was performing well. Actually, you weren't happy. And so you used AI to audit the contract and find an exit clause, and you were able to find one, correct?
I hear you.
I wouldn't necessarily say use AI instead of a lawyer, but for your own information, yeah, you can upload a PDF and say, hey, what do the clauses say? What are the performance measures here? And it was definitely helpful for us to better understand the terms of the contract. It's on the upswing, and it's something that we're trying to use more and more in all different aspects of our business. There's also a lot of AI on the property management side in terms of leasing and follow-up that we're looking to roll out as well.
Speaking of that, and if that's what you want to touch or whatever, but I'm going to give you guys free reign. Give me a wild prediction, not so much for what the company's going to do, but for the real estate market, our industry. Give me a wild prediction as we're reaching the top of the hour here for the industry that we're in. It could be anything, rates, leasing, the bottom falling out in a crazy recession, whatever it is, whatever y'all want to predict. Give me a wild prediction that maybe people aren't thinking about. But Justin, give me one for wild predictions in the real estate industry. First.
Prediction for the real estate industry in 2025.
I think that we will lease our first unit and that we will have a AI voice interface that will full on rent an apartment for us and maybe even speak to a tenant, whatever language they need to speak in whatever accent we need it to speak in, and it will be able to collect rent, negotiate leases, follow up for us, and we will have a full AI interface for tenant issues and enrollment, leasing, and everything like that. I believe that we will beta test that at DeRosa, and that will be stepping into the market next year. A voice interface that AI can use. It already exists. Gemini already has a voice control that can talk back to you. So all we need to do, train something like that to be able to lease a unit or collect rent. That will happen. Hopefully our company will be one of the beta testers of that technology. That is my crazy prediction for next year.
My big prediction for 2025 is that investors in syndicated deals will be able to start trading their shares in one syndicated deal for another in 2025.
A real trading platform, real legit trading platform for people being able to sell seasoned equity or sell equity from something that they want to trade out of, really taking the Wall Street model off Wall Street, putting it on Main Street.
That's right.
I love that. Yeah, use a little bit of blockchain in there too. I think that will become mainstream, that secondary equity trades will become more common, if not mainstream. All right, Justin, we've watched you some time there, brother. What do you got?
I think we're going to sell something that we today are not even thinking about selling. And I think we're going to buy something that we are not even expecting to buy, because I think things are going to change very fast in January, February, and March. Interest rates have been starting to cut. A new administration is coming in. And I think that very rapidly market conditions are going to start swirling and changing. And I think that nimble operating groups, the companies that can respond to change and recognize opportunity and move quickly, are going to be the ones that will be successful in 2025. We're built as a nimble company, and if we can see that opportunity and move, we will be able to recognize it and pounce onto something. And so I think there's going to be a lot of change coming in the first couple months of this year, given all the changes in our country. So,
well, you guys all got me excited. That's the one constant in life is change, right?
I was telling Justin that one sale surprise he is talking about that may happen in the first quarter of next year. Check your Slack message.
There we go.
Jeez,
All right. Guys,
I don't know.
I'll bring this home. Stay tuned, guys. For the DeRosa Insiders followers, here's what we've got for you. If you are looking to have big, hairy, audacious things, and as Justin said, buy things you're not expecting to buy, bite off a little bit more than you think you're capable of. What's true is much bigger. If you're looking to exceed your own personal expectations of yourself in 2025, two things I got for you. Number one, we are going to be rolling out a product on just everything that me, Justin, and Hervé have learned over probably, I don't know, I don't want to say a number here, but maybe 60, 70 years of experience in this industry and in business of the three of us running things. What we've learned and how to do what we do is all going to be out there in a package for you guys to go and download. And literally all the tools that DeRosa uses, right, and that it's all going to be there for you guys to jump out and grab. So stay tuned for that. That's going to be a revamp of our accelerator program, which is you guys are going to be able to jump out there and learn to do things in the DeRosa way on your own. You can build a DeRosa-esque company with close to $100 million worth of other people's equity, and we'll teach you how to do everything we did, right? Next thing is we're going to be doing a lot more authentic, transparent webinars, teaching you guys how to build a better, stronger passive investing initiative for yourself so you can achieve your goals and live the life of your dreams. We're going to be helping you guys do that in 2025 as well through monthly webinars. They're going to be teaching you everything from how to leverage tax advantages to which asset class to get into, to which markets of the US you should be peeking into. We're going to be getting into that next year as well. And of course, DeRosa is going to be rolling out all kinds of new initiatives, including new funds. So what better way to build a company that is on the right track DeRosa is than to join DeRosa as a passive investor and join the transparent community that we have so people can see what we're doing and be involved as a passive investor and perhaps build something on your own. Aisha wanted to know, do we have internships for investor relations at DeRosa? I was wondering if there's an email or application. Maybe you could send Aisha a direct message on Facebook.
He may not be able to do that if he's not friends with her. So let's give her an email that she can send to.
All right. info@derosagroup.com or nray, R-A-Y, N as in Nancy, R-A-Y, at derosagroup.com. Fire a line to one of those two email addresses. We will hear what you've got to offer us because we always need great people. We're going to great places and we need great people to help us get to those great places too. So Aisha, thank you for your great questions today. Look forward to talking to you more offline. Justin and Hervé, thank you guys. It's been a great conversation as always, and yet another great year of business with you guys. Cannot wait to have a phenomenal 2025 for us to tackle together. What do you guys think?
Does this mean we're done for the year? Does this mean I get to take the rest of the year off?
That's it. You're done.
Done?
For the bourbon.
I've been doing anyway for the most part of this year, so it's pretty much constant and consistent with what you've been doing for the past 6 months.
I'm not sure when Justin sleeps, honestly. You're born at home. He's got a thriving business that he's the only adult in the room running, and he's got a newborn at home. I'm not sure when he sleeps.
Kathy had to have.
She did have a newborn. She did have
Big guys, and they would tell you there's a big difference.
She did. Dude.
I get reprimanded when I'm like, "Oh, we're pregnant." When Liz and I were pregnant, like, we're pregnant. No, we are not.
Right.
So you know, are you carrying around 40 pounds? That don't look like it. You know.
I agree. You're right.
Anyway, on that note, guys, there's nobody I'd rather be riding into 2025 with aside from you guys. So thank you for joining us and our DeRosa Insiders listeners today. Looking forward to a phenomenal year together next year.
Likewise, upward and onwards to everyone.
Absolutely.
Have a great holiday, everyone.
2025.
Thank you, listeners, for your questions today.
Bye, guys.